Hello, everybody. I'm Case Eichenberger, the Chief Investment Officer with Retire Path Advisors, and welcome to this month's market memo for the month of April 2024. In this short video, I wanted to walk you through some of the major headlines we've been keeping track of here at Retire Path Advisors and talk about some of the market implications they have had for the month of April and get into a little bit of an outlook for the rest of the year. So without further ado, let's jump into it. Well, stocks so far have taken a breather here for April after a very hot start to the first three quarters of the year. If you kind of look back from January through the end of March, the S&P 500 as the recognized stock market was up over 10% over the first 3 months of the year, an amazing 3-month run. And honestly, even the 3 months before that to end 2023 was a really good 3 months. So we were due for a little bit of a pause here. And I believe that is truly what it is, just a pause in future forward movements for the stock market. Right now, I'm recording this on April 30th. Stocks are down roughly between 2 and 3% for the S&P 500 for the month. So nothing major, just more of a healthy pullback that we have seen so far to start the month of April and to start the second quarter of 2024. There is a lot of good news and a lot of bright spots that we are taking notice of here when working with your investment account at Retire Path Advisors. Corporate earnings are expected to be very strong for the third quarter in a row, really. This is just kicking off for Q1 2024. We are starting to pay attention to the S&P 500 mega cap earnings announcements that are coming out fast and furious every morning and afternoon of every day of the week, it seems like. And right now we are on pace for the third quarter of growth on a year-over-year basis. So 3 quarters of growth on a year-over-year basis, and the future 2024, 2025 looks very good for corporate earnings as well. And ultimately, remember, that is why we invest in the stock market, is to follow the path of corporate earnings over time and to take a share of the company profits. So far, so good with corporate earnings. Maybe on a little bit of a sour note, we do see inflation becoming a little bit more range bound. If you remember, in 2022, it really spiked around 9% and has been falling precipitously since then, down to around 3 to 3.5% range where we're at now. I wouldn't say it's necessarily stalled out, but we've seen it kind of muddle around that 3 to 3.5% range right now. There's still going to be a lot more readings of inflation, a lot more readings of unemployment, of jobs, of wages that will come out between now and the end of the year. And we believe there's still a chance that the Federal Reserve may cut interest rates here in 2024, which is standing at 5.25% to about 5.5% on the Treasury bill rate right now. So this is much more something we're going to be watching for the rest of this year. And it is a very important aspect of the market right now, as you see a lot of market movement based on these inflation numbers. But so far, so good. It's been a really good year. It's been a great 6 months, a great 12 months. That tells us inflation has come down a lot since it spiked. We've also seen a little bit of a reset of sentiment. Sentiment meaning, how good do you feel about investing in the stock market right now? Or are people investing more in stocks or more in treasuries right now? There's a lot of different ways we can gauge it. And we did notice extreme bullishness at the end of quarter one. Everybody was very excited about the stock market. And when you start to see everybody kind of crowd into one part of the market or in one trade of just only buying stocks and options on the stock market, we start to become a little bit nervous about receiving a pullback. And as I mentioned a few bullet points earlier, we did get that pullback in the stock market. And that has actually reset our sentiment gauges that we look at here for investor sentiment and other moving averages on the stock market. That's actually a good thing. When everybody, as I mentioned, becomes very bullish, you want to be a little cautious. And when everybody starts to become cautious or bearishness, you want to become bullish. So we've seen a reset here in Q2 in April, and we believe that's going to be good for the stock market to continue its run through the rest of 2024. Something, again, we plan to keep an eye on very closely. So in the end, we're very excited about the prospects of the rest of this year for the stock and bond market. And we just note that it is still very important for you to stick to your diversified investment plan. When markets do have a pullback, like we saw here to start the month of April and to start the second quarter, it is always important to remember that your long-term investment plan has been designed specifically for you from your advisor at Retire Path Advisors. So thank you again. Thank you again for your trust. We approach the management of your complete financial landscape very seriously by being a trusted steward of yours, an advocate, and a confidant. And remember to always reach out to your personal Retire Path advisor if you have any questions regarding the markets, regarding your financial plan, or anything at all. You can always follow us on our website or send us an email, info@retirepathadvisors.com. Thanks again for watching, everybody, and I will talk to you again next month. Thank you.